Own sweet home, own sweet home. I dream of my own sweet home. Right here, right now. Amit Inamdar will show you how. Call Amit and you are set. Or just visit ownsweethome.net.
DRE license number 013555522 and NMLS number 236574.
Hello, namaste and welcome Radio Zindagi listeners. I'm RJ Renuka. Today we have another exciting conversation with none other than Amit Inamdar. You are going to get the power-packed 30 minutes of information on real estate investing considerations. We always welcome you to call us at 510-270-8830 to ask a question on the radio. However, if you are unable to get in, you can always submit a question for a personal response. Just go to Amit's website, ownsweethome.net, and click on the radio show link to submit your question. Hey, and you know, you can always find Amit Inamdar just by searching his name on Google. Hello, Amit, and welcome to the show.
Hey, thank you, Renuka. Hello, friends. Own Sweet Home, and welcome to my show, Power Hour with me, Amit Inamdar. As you keep hearing, the rates are dropping, okay? And this is a really, really good time to buy. Your monthly payments are just going to amaze you. My recent research showed that in the counties of Alameda, Contra Costa, and Santa Clara, the affordability is still high, around 38 to 40%, and there is still further upside in these markets. If you look at the markets in San Mateo and San Francisco counties, the affordability numbers there have dropped into low 20s, and in my opinion, those markets are actually at its peak. Okay, this prompted me actually to have a real estate show today about investments in these areas where the affordability is still high, and who should do it and when and where one should do it. So we will talk today about how one should go about investing in real estate.
Amit, I heard someplace that 9 out of 10 millionaires are made in real estate.
Mm-hmm.
Others may happen by other means, like stock market gains and other means. So this is a really, really good topic today that you have brought up.
Yes, it's absolutely true. There is a simple logic, okay? You buy a home today, it goes up in value by the time you retire, because that's what the history shows, okay? Within your 30 years of ownership, basically. And you also paid off the home because of your low affordable monthly payments. So if you bought a home that is worth $1 million and by the time you retire, you paid it off, you're an automatic millionaire just by buying a home today. Okay? Even if the values don't go up, you are an automatic millionaire. However, as you know, that $1 million won't be a sufficient amount to retire and to maintain your comfortable lifestyle you have today. So if you qualify to buy $1 million home today, buy it. And when you retire, you will have fully paid $1 million home that had affordable payments that you made over 30 years. Just do this exercise, listeners, okay? Just close your eyes and think of how many people you know who own a home that is worth $1 million or more. All right? Now you have a number. Okay. Now think of the people who you know who have millionaires with stock market gains or stock options that their company gave them. All right. Now you see, I can't read your minds, but I can sense it that the real estate owners are the clear winners.
Listeners, at this junction, I will tell, do not listen to Amit by closing your eyes. If you are driving, do not close your eyes and don't do that exercise.
All right, okay.
So, listeners, you are listening to Power Hour with Amit Inamdar, and the call-in number, if you have any questions regarding real estate loans or today's topic, real estate investments, do give us a call in the studio. Today's number is 510-270-8830. Again, 270-8830. So, Amit, as you said, real estate millionaires, it's so simple.
Right.
It looks so simple.
Mm-hmm.
However, if you want to become a multimillionaire, one should expand their real estate holdings, and that is where the investment real estate comes into play. Is that right?
Yes, that's a very good way to put it, Renuka. Remember, by its nature, real estate is a long-term investment. So even though we have seen ups and downs in real estate market over the past 30 years, the real estate markets have gone up everywhere. When you plan to invest in real estate, You are a mature investor who does not need to see his bank balance through their monthly statements. They understand the value of real estate and the value it creates and are satisfied with the valuation and their wealth. Otherwise, people like Madoff, the guy who went to jail for, can take advantage of these statement happy people, and they can generate any statement you like and show you great investment returns even though none are behind those statements. What matters is your net worth. Even in stock market, they talk about dollar cost averaging and long-term investments in good companies. We see fluctuation in the stock market as well as real estate. Real estate is no different, but it actually gives you a discipline to invest on a regular basis in the home they are already owning. So this is a great way to invest and build your wealth.
But Amit, with Bay Area prices so high, how does one look at the investment opportunities? I mean, for many it is like putting all eggs in one basket.
Yeah, that is true, and to feel comfortable with real estate, first thing is to own your own home, okay? Get a feel for what it is to own real estate or your own home. If you haven't owned a home, it becomes very difficult to get convinced of investment real estate. Once ownership happens, you are your own guide going forward. No one to generate monthly investment statements for you, but you knowing that you're mature enough to know what your wealth is, and that's where owning a home is your first step. Once you know and you're comfortable with the benefits of home ownership, you are ready for the next step, the investment real estate.
Listeners, you are listening to Power Hour with Amit Inamdar. Today's topic is investment real estate. If you have any questions, do give us a call in the studio, 510-270-8830, 270-8830. So Amit, you are saying that people who already own homes are really good investment real estate candidates?
Absolutely. Even if you decide to upgrade your home to bigger and better home, knowing that you qualify for that bigger and better home, you can actually rent your current home. It's that easy to become a real estate investor. However, it requires careful planning. Additionally, many families now are not ready to move out of the current home to buy another. Kids are settled in schools, you know your neighbors, you are comfortable with the neighborhood amenities, and moving out sometimes is not always an option.
So how does one go about knowing what is the right thing to do at this junction?
Right. That's when you actually need advice, right? This is when I typically have a one-on-one meeting with my clients. In the meeting, I analyze their current finances, the equity they have built into their current home, look at the return on equity for them, whether it makes sense to rent the existing home and buy another investment. Do they have required like 25% down payment, which most of the investment properties require? And what are their investment goals? Is it a cash flow or future appreciation? Then I narrow down the neighborhoods where the possible investments exist. We run numbers for profit and loss statement. And as long as the numbers are what you are looking for, you can proceed with the investment property search and or a new home search when you decide to rent your current home.
That is a very systematic approach, Amit. So knowing what options are available, it is then up to the real estate investors to select the right option for them. So how long does it typically take to find the right investment?
Right. Let's get to that question right after this call. Hi, this is Amit. How can I help? Own Sweet Home.
Hi. I have a question about owning home, of course. What is your take on renting versus owning, and especially in today's market with peak prices, and and also the affordability, where if you cannot put that much of a down payment, what do you think about that kind of a scenario? Whether one should take what step?
Right. See, first thing, of course, you have to make sure you are able to buy the home. Okay. If you are not able to buy a home, you will rent. But now say you are able to buy a home and then you want to consider whether I should buy or rent. Okay. A short-term thinking may direct you towards renting, but a long-term thinking will actually direct you towards buying. Okay. And each individual scenarios are different. And as a matter of fact, over the last 3-4 years, the new loan programs have come up. And last week I announced a loan program where you can get $1 million loan with only 5% down payment. Okay. Now, The question is, I mean, that 5% down payment is not the only requirement. There are some other requirements, and whether we have to know whether you fit into that. So the thing is, the first thing is to get the things evaluated. And remember, the mortgages are 30 years. So by age 65, if you want to be free and clear of your rent payments, which are of course going to go up in 30 years, and you want to own your home free and clear, so you don't have that monthly expense and you can live and retire and all that, owning is always the right choice. Okay?
Right.
Okay, thank you very much.
All right. Thank you.
So Renuka, you are asking me about, I kind of lost it.
How
Okay,
long does it typically take to find the right kind of investment for a real estate investor?
Understand. That depends, right? If you are looking for to purchase a condo or a single family home for long-term investment, you may find it right away, maybe from a week to a month's time frame. However, if you want to take advantage of the higher return investments like multiplexes, it may take a while because it's just the purely supply of these properties. There are not many multi-unit properties come on the market like a 4-plex or a 6-plex or a 10-plex, right? Like an initial investor, maybe start with a duplex, right? So in any market, there are lot less multi-unit properties for sale compared to the single-unit properties. Also, single-unit properties are relatively easy to show. Multi-unit properties are occupied by tenants and are very difficult to show. So you must know your numbers. Your goals must be clear to jump into investment real estate. And by goals, I mean you should figure out what kind of returns are you looking at on your investment, whether it's 3%, 4%, 5%, and based on that, we'll actually focus on the areas that actually give you those kind of returns.
So listeners, you are listening to Power Hour with Amit Inamdar. If you have any questions regarding real estate, loans, or today's topic, that is real estate investments, do give us a call, 510-270-8830, 270-8830. So market has decent inventory. Home prices are still high. However, they are affordable. So thanks to lower interest rates, whether you are a buyer, investor, or a seller, do you know how you must prepare offers for purchase? And as a seller, evaluate offers from buyers. If you are planning to sell, many times Amit has a ready-made buyer for you. When Amit works with buyers, he will pre-approve their loan in advance. This not only helps buyers but also helps sellers. If you are planning to sell, all you need is one qualified buyer to buy your home. Amit has already pre-approved these buyers. So whether you want to sell in one open market using Amit's proven marketing methods or want to do a silent market sale, you can call Amit directly at 510-364-6686. You can also visit his website ownsweethome.net, that is ownsweethome.net. And if you forget these numbers, you know what to do. Just Google Amit Inamdar real estate broker and you will know ways to find him. Today we have been talking about real estate investment considerations. So Amit, you said sometimes investors do not even get to see the property they want to buy. Can you please explain a little bit on that one?
Sure.
How can one jump into buying something that they haven't seen? I mean,
right. So the thing is, let's look at it this way. Okay, you buy a stock of a company. Have you seen that company inside out, or are you just kind of going over some information that you hear from your friends or read somewhere? So similarly, but look at the practical side of things when it comes to real estate. The single unit condos or townhouses or single family homes are relatively easy to see. Even if they have a tenant, we can make effort for appointments. However, imagine if it's a multi-unit property. Okay, say it's a 4-plex or a 10-plex. It's very difficult to have 4 to 10 tenants go out with their families every Saturday, Sunday. So so someone can do the open house, right? I mean, you can't ask them to leave their house when they are actually paying the rent for it. Remember, just like number of multiple unit properties are less, so are the number of buyers for these kind of properties, because not every person can think in the investment language. And those who know can write offers to these properties subject to inspections. So they say, hey, I would like to buy this property at this price, and if you accept my offer, then I would like to view the property, and if I don't like it, I'm going to not buy the property. Okay, but once the buyers and sellers agree on the price and terms, next thing that happens is the seller gives notice to the tenants, a notice of entry as required by the law, and arranges for prospective buyer to see the property.
Oh, good. So you do get to see the property before you purchase.
Of course.
Okay.
Of course. Yes.
So, listeners, Amit is both real estate and mortgage broker, and he is in this business for last 15 plus years. So 15 plus years of experience. With changing interest rates, your home loan qualification also changes, and it's very dynamic. So when you work with Amit, he monitors your qualifications for you. So updates the pre-approval as needed for the offer submission, and gives you that confidence and peace of mind to bid on the home of your dream.
Additionally, anyone who wants to consider real estate for investment, this is the time to look for that. The interest rates have dropped in recent weeks and actually days. As of even today, they dropped. Okay, and the higher market rents are covering the mortgages. This means successful real estate investing. More on that after we come back with this short break.
Have you joined the Happily Ever After Club?
Happily Ever After Club?
Happily Ever After Club. Membership is automatic once you buy your dream home from Amit Inamdar. He's both real estate and mortgage broker. One stop, no need to shop.
Oh, Amit Inamdar from Own Sweet Home.
Yes, that's Amit from OWN Own Sweet Home. Call him today, 510-364-6686. Again, 510-364-6686. Or visit ownsweethome.net. That is ownsweethome.net. DRE number 0135552 NMLS 236574.
Welcome back, friends. This is Amit Inamdar, and if you are in the market to buy, sell, invest, or finance, you will get unbiased advice that will save you money. And that's my promise to you. To get hold of me, just Google my name, Amit Inamdar, real estate broker, and you will know ways to find me. Having all your questions answered at one location and by one person means saving time, money, and having peace of mind that you are cared for by someone like me who knows this business. Today we are talking about investment considerations for real estate.
So Amit, how are the rates for investment properties, and what is the minimum down payment requirement?
Right. So even though you can buy an investment property with a 20% down payment, I always suggest around 25% down payment for these properties. Okay, this actually saves you around 1.25 to 1.5 points when getting the loan. A point on a loan is 1% of that loan. 1 point is 1% basically. So on a $500,000 loan, 1 point is going to be $5,000. At 20% down payment, typically you pay 3.125 points to the lender to get the same rate as if you were going to have an owner-occupied property. The moment you put down 25% down payment, your point requirement drops to 1.75 points. That's the savings of good 1 3/8 points, or almost close to 1.5 points, right? And so it's always a good idea to get a 25% down payment. And other question you asked is was the rates. As an investor, if you plan to make money on real estate, so does the lender. Okay, he's saying if you're going to make money, I want to make money too. And investment rates are typically about 0.25% to 0.5% higher than the owner-occupied rates. And at 25% down payment, you won't basically end up paying any points at that point.
And you are saying that one is trying to make money after paying the higher interest rates. How does one justify that?
Right. See, that's why you need to be a ready, willing investor. Okay, knowing these things helps manage surprises down the line. When you do your profit and loss statement, you use all this information to decide on your investment. So many times, as I indicated before, it is better to put your existing home on rent and buy another owner-occupied home. This way, you continue to rent your existing home at the same low interest rates, okay, as owner-occupied interest rates that you currently have. So when you are ready for a one-on-one meeting, we discuss all that and see what makes most sense to you, both emotionally and financially.
So listeners, if you are in the market for investment, real estate investment, or you just want to learn about current market and home buying, you can view the first time home buyer webinar. It is available on Amit's website, ownsweethome.net, that is ownsweethome.net. If you are a first time home buyer or just want to feel comfortable with the home buying process, do visit the website and listen to the recorded webinar. This will not only give you the overview of the home buying process, it will also pre-qualify you, let you know more about neighborhood selections, school selections, etc. Link is located as an image on the left column on Amit's website. You cannot miss it. If you do not remember the website, you know what to do. Just Google Amit Inamdar, real estate broker, and you will get to his website. After you have viewed the webinar, all your questions may have been answered and you will have new questions. This is when you can have one-on-one meeting with Amit for your pre-approval and neighborhood selections. And this meeting is free.
Absolutely. And the thing is, when we meet, I mean, as a buyer, you really need advice as far as which neighborhood I can find a home based on my financial ability. And all that thing is going to happen at one location that's in front of me, one-on-one meeting, the power hour with me. All right. And earlier we were talking about the financing process, right, Renuka?
Yes. So can you summarize the steps involved during the 30-day
financing process?
Financing
Sure.
process?
See, once you're comfortable with like a rate, that code that you get, okay, I will provide you with a list of loan documents to collect. You can either email those documents to me or share those via cloud services like Dropbox. I also have an online loan application that you can complete. Once completed, I check all application information against the documents submitted for accuracy. Prepare good faith estimates. By the way, those are going away as for October, and you will have something else. It's called loan estimates. If it's a no-cost loan or no non-recurring cost associated with the loan will be paid for you. Non-recurring cost will be paid for you. Okay, for a no-cost loan. It takes me about a day, half a day to prepare all your loan-related disclosures after understanding your credit report and defining your refinancing strategy and preparing those disclosures for you that are going to save you money. At this point, we meet face-to-face. If you have not done so already, go over all the loan disclosures and the process. Right?
So we have been talking about the low rates, Amit. Can you tell us what the rates are today?
Yeah, right. I mean, this is like a very dynamic thing happening, like with this China situation and the global economy is kind of slowing down, kind of fear kind of coming over or hanging over the whole markets. The markets have dropped drastically. And just remember this rough rule of thumb. Anytime the stock markets drop, the interest rates drop, okay? And there is a logic behind all that, but I won't explain that here. But there is a logic there why it happens. But stock market goes up, rates go up, stock market goes down, rates go down, okay? So if you look at a paper borrower with excellent credit score and a 75% loan-to-value ratio, with a single loan on a single family residence, the 30-year conforming rates are around 3.75 to 3.875 on purchases. The 15-year rates are basically down below 3%. The 5-1 ARM is also below 3%. 7-1 ARM is in low 3%, and 10-1 ARM is around mid 3%. Okay, and once you call me, I will quote you both the actual note rate for your specific situation and also the APR. Also have a no-cost refinance rates, and since the rates have fallen down, this is a great time to call and get your loan refinanced at below 4% rates. Okay, trust me, this is the time. You need to have your paperwork ready and call me, and we'll make sure that you get the best possible rate.
Those are really, really good rates, Amit. Listeners, as you know, Amit is a mortgage broker also. He has a system where if the rates drop, he will alert you with the new rates that will save you money. That is his commitment to you. Once you work with Amit, he is your lifetime real estate and mortgage advisor.
And I do real estate and mortgage planning for my clients annually based on their family needs that are today and also by going forward. Do they need cash out for kids' education or home improvement? Should they refinance, buy investment property or not? If they finance, should they pay minimum payment or different payment for additional 30-year terms so that they don't go into the loss every time they refinance? Mortgage and real estate planning is a serious activity, and many times homeowners forget this and pay thousands of dollars in additional interest during the course of their home ownership. For many of you, it may be advisable to sell your current home and buy a newer, bigger, better home in desirable neighborhoods. You can also rent your current home and become an investor. All these activities fall under mortgage and real estate planning.
So, Amit, any last minute thoughts?
All right, the last minute thoughts. Basically, I mean, it's easy to become a real estate investor. Call me, okay? All it takes is a little bit of time, and that time is going to take you long ways, okay? So for one-on-one meeting, Power Hour with Amit Inamdar, I'm always here. You guys have a great weekend, own sweet home, and I look forward to talking to you next week.